Good morning, everyone. It is just after 5 o'clock on March the 16th, 2020. Here we are. We've got quite a lot to go over this morning as we kind of take a look at what the markets are doing. Going to be another absolutely insane day, I think. Here we are. So we're already down. We're in our S&P 500. We're seeing 244.50, 244.80 on the bid. 244 is right here, which is under our previous low from last Thursday. Let's talk about Friday first. Let's go to the 5-day, 5-minute. Let's talk about Friday. Friday, we saw this gap up. I actually got short at 272, 273 call credit spreads, and then 274, 275 call credit spreads. I broke my rules on Friday, and I'm a little frustrated with myself due to that, because down here, as we're chilling in the 250s, the 260s, for almost all day. I didn't even into the 249s. I was just going to let those expire worthless, and then of course we had Trump's press conference that shot these up, and I should have got out at either a penny for the spread or 2 pennies for the spread, and I didn't, and I ended up taking a small loss on those. I've got 2 left, one expiring today. I mean, let's just even go to those real quick. So I've got a couple. I'm feeling really solid about these. Got the buy order here. As you can see, 245, and then here's my call, 280 and 281, and then I've got another for Friday at 280 and 281, well beyond our expected move here. So expected move would be 260. Might look to ladder into a couple more here, seeing what I get for today, maybe even further into the week on any pop. So here on the March 20th. Anyways, so we see this major pump right here, and then basically giving it all back and more here at 245.20. So we go back to our daily video, we got to go out now. So we're looking at, this would be considered some level of support here, but if we go, and assuming that we do drop below this, we can fix this later. But now we got to go out to our 5-year 1-day chart, and then we start seeing some other levels of support, right? We start seeing this from 2018, right? So this is the 2018 low at 233.61, right? So we adjust this 233, what's that low? 233.76 is actually the low. So we edit this property, so 233.76 is the new low from this, and this is our December 2018 low. And so we adjust this here. Now all of a sudden we have a potential target, right? Another potential target all the way right here. Okay, 233. So we've still got another couple of points before we get there, but if we open up in this area, that's the next target. Then we got to go all the way out here. So which one is this? March 2017 low at 231.45. So we keep going all the way out to March 2017, and then we've got a couple more, right? So we've still got a couple more that are worth watching, and if we get there, we'll certainly update the charts, but for now, these are we're having to go all the way back to 2018 to find some level of support. I guess you could technically consider this candle support as well, but really that's part of that uptrend. I think this is much more likely to be a level of support than this one right here. I think that folks are looking for the low that we got here a couple of years ago. I guess a year and a half or so ago now. Now, I think it's worth noting here just how quick this move has gone. So 233 or 333.08, and we're showing 244. So we've dropped 95 points here in our S&P 500. 95 points. It's incredible, right? 95 points since what day is this? 2/19. So we've been in this crisis for just about a month now. Okay, so we've been in this crisis for just about a month. We've got these areas, right? So it's exponential moving average. I think that until we really break this with any level of certainty, this is still going to be a great level of resistance to watch. Obviously, we're below our 50 simple moving average at 324, actually 319.26, and then we've got our 200 simple moving average at 304.57. We've still got a ton of time, right, before we even begin to think about challenging these. Okay, we flirted here for a little while. Excuse me. We flirted here for a little while, for right at a week. Yeah, 6 days here at this 200 simple moving average before we just crash through it. I don't see us really challenging this anytime soon. And in fact, if I was going to get short, that would be a place I would. So going in, what is the game plan, right, as we look at the S&P 500? I'm going to be selling rips, right? So if we get some of these now areas of resistance, and I mean, I think that we can even look back at some of this historical support as resistance now. I mean, I think we've got great resistance here. We're going to have some resistance here. We've got a gap right here. It looks like we're didn't quite get a gap here. We're going to have a major gap, though, from 269 all the way down 25 points. I mean, we're at a 10% down day right now. That's what we're looking at. Okay, so huge implications there. We're going to see similar things in all of our daily charts. I think now perhaps what is the most important is for us to go through just some of our put-call index ratios, right? Major, I mean, we are seeing significant put-call ratio. Here we are. We finally see the SPX deviate here a little bit from gold. Let's actually take a look at gold. I'm a little frustrated, to be perfectly honest, with the gold. I mean, we've seen this major reduction here, and these are our gold futures. Only up a percentage. We're down close to 10% in equities and only up a percentage. Perhaps the reason that I'm most frustrated with gold is because of this. You know, you can see here, really nice. I mean, we are well beyond our break-evens here. So if I look at gold, I'm a little frustrated with gold. Just because of this, you know, I was really worried actually about going too far over here to the call side, and you know, I've done a lot of adjustments, and so this isn't reflective of all of my adjustments here in gold and some of the bank credit that I've got. But I'm frustrated, particularly frustrated with this short 150 call spread or put spread that I have on. I'm a little frustrated with that, but you know, we'll see if I can't get a rally here in the next 2 weeks, even into this area. You know, with all of the volatility, I certainly think that it is possible. Okay, but back here, you know, we'll see what happens. It looks like gold is retracting a little bit from its, you know, high today. We're still up a percentage point, up 19 points here in gold. But I think to go back, we've really deviated, right? So we spent so much time here, and in fact, I mean, what are we at? We're at levels, right? Have we seen these type of levels? We really haven't. I mean, we're going back 3 years now. I mean, what is the state here? 2017, right? So we haven't seen levels like this since 2017. And so I think that it's interesting to note that these have really deviated from one another. Okay, let's here we are in TLT. I mean, let's take a look at bonds. So TLT, really insane moves in the bond market too, right? These are just unprecedented types of moves. Level of volatility, again, unlike anything that we've ever seen. You have these small candles versus just massive candles. And again, very similar to gold, right? So we see this massive move up, and then we just see huge implications for this type of move here in TLT and in bonds. Here we are in our EEM. Still really interesting to note, and I guess the reason here is because we've also seen EEM move. I mean, we were at year highs at a 7 note, and we're still there, right? So EEM, even though we've seen this massive weekly reduction here in the SPX, we're seeing a similar thing in EEM. So let's go to EEM, and let's even move this to a weekly chart, right? And we're going to see a similar move down in EEM, right? So even though the ratio is essentially remained the same, really interesting major doji style candle here. I wonder how I've got EEM on. Yeah, you can see down a little bit here in EEM, likely going to adjust this position here in EEM a little bit, but I do like the overall position that we have here in June. So I do like that. So we continue to go through. I don't even know why I have GIVO. Our weekly here in the SPX. Okay, so down below the 50, down below the 100, down below the 200. We're going to open below the 200. And so, as we look 2640, 2606. What do we see here? I think that we've seen that we are certainly in that bear market, right? I don't think there's any questions now, and I think that we have to adjust our trading. So what does this mean? I think we have to continue to sell the rips, right? We've gone from a buy the dip scenario to a sell the rip scenario here in all of our major markets, right? And so I think that's what we're going to have to continue to do. I think that until we get back into a VIX, and I mean, VIX is going to be insane again today. I think we're going to challenge, if we haven't already, these highs, right? Until we get back into our box, right? I think that we're bearish equities. I think long-term bearish equities. I think that trading through this has been really beneficial, because I think that we can see just how different, right, these types of these types of moves are. I mean, and here we are. We've been here since the 24th out of this box, and we've just seen continued bearish in equities. In the box, we just stay bullish in equities, right? So until we get back into this box, I think that we're going to have to continue to just stay real bearish. Sell any rips until we get a lower VIX. That's got to be what we do. So let's go into TNX. So here's our 10-year Treasury index. Again, really just massive moves from a low of 398 back up to 951. So I think that we just are going to continue to have to watch that. Let's get into crude. I need to clean this chart up a little bit, but I think it's kind of important just to see where our futures are at. Futures down big again, down 5% here in our futures. So we closed it, up here at 32.90, and now we're down at 30.26. So gonna have to watch what this is. Another bearish engulfing. I think that we continue to potentially see either a floor here, but if we break this 30 with any level of conviction, then I think that we're gonna have to see continued move down. So I think we have a couple of really nice trend lines. I think that we need to draw a couple of other trend lines, but for now I think this is really where we're at. Okay, let's go through one of our major watch lists. So let's go to personal. We we've got quite a few. We don't need the futures right now. We had those up last night as we were looking. Major market indicators, and here we go. All right, let's just run through these. We're going to go back to the daily. And here we go. EEM, looking like we're gapping down pretty hard. Gonna test this low from a couple of days ago. Emerging markets not looking very good. All right, EFA gapping down. Gapping, looks like we're gonna gap down below, if this bid is any indicator, past our Thursday low. Gold is up right now about $1.25. You know, I've got a number of things to update here on this chart. We do have this high 156 from March 2013. Let's go back a little. Let's see what other things we have. Haven't named that, but gonna need to go back and see here where that high is. We got quite a few areas to watch. Okay, so certainly looking here at this 136 level as short-term support. All right, let's get back. Let's continue to go down. HYG, so high yield down again. Very, very interesting at 76. So I'm going to continue to have to look at that. IWM gapping down 108.25, 109. So down 10 points, 10%. All right, this box is really just no longer relevant at all. So going to need to do some updating. IWM at 108. We are looking like this from, what day is this? 2016. Okay, so we are even far beyond the 2018 into 2018 levels. So looking like we are getting ready to challenge this 2017. Is that right? 2016 low. Okay, so gonna be watching there. Let's go into our junk bonds, down about 5% here. The Qs getting ugly. Q's getting ugly, down to 176 as we look at our chart. Looks like this area from earlier in 2019 is really where we're at. We've actually, interestingly, got quite a bit, and I think that's one of the reasons why we see such a massive divergence in our tech, right? So our tech is very, very different. S&P, we've talked a lot about S&P right now. TLT, a lot in TLT, up, interestingly, to 159. USO, oil getting smacked, down more than 10% at this point. A lot of gaps, a lot of interesting things below this earlier low. Gonna look to continue to see, I think, weakness here in USO. UVXY. All right, so long term, I mean, you know, long term we are still well beyond where we were at 30,000. However, bring that into the daily and a much different story. Okay, much different story. Got a lot of room to go back. Look at $81, well beyond the highs from recently. 81 gets us back to 2018 levels. So 2018 levels. It's big. VIX at 55, well beyond 2018 levels. Got to go all the way back to early 2018, right at the Vocalypse level, actually. So anybody that held on, hoping for a miracle, you might have just got it. And that's it. So what is the game plan for today? To watch positions. We're going to continue to adjust some positions here. Got some adjusting to do, you know, looking to take in a little bit more credit. On some of these positions here, you know, and really just try to navigate some of the things that we have open right now in our different securities right here. So gonna walk through that, but other than that, you know, we're just gonna continue to sell rips, trying to make things happen. So if you have any questions, reach out to me at Ryan@SellThatOption. Hit me up on my Patreon page. Otherwise, let's have a wonderful week. Try to make some sense out of this chaos and just keep moving in the right direction, folks. It's been tough out there. Stay strong. Keep to your trading plans. Stay safe. and we're just going to continue to again move in the right direction. All right.